Hello and welcome everyone to Oil Asset of the Day for the 30th of June 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new week here, what do you need to be aware of? We have seen hedge funds and money managers, they've trimmed their overall net long positions on crude oil in the latest week. And we continue for now to find resistance at $41 per barrel and support down at $36. Now, at the moment, the best way to trade oil is very simply range-bound trading. There are opportunities to short from resistance at 41 and also to buy in at support at the moment, close to $36 per barrel. Now, the key news items that I would look at over this week will be Tuesday's API data and of course Wednesday's oil inventories. Now bear in mind that we're also going to see an impact on oil prices with Thursday's non-farm payroll data and the minutes from Wednesday's FOMC statement. The reason being is because the impact that those two news items have on the dollar and of course crude oil being traded against the US dollar. If you do see a breakout on the US dollar, this is where it's likely to put pressure on crude oil prices to the downside. Now, normally as you transition into the month of July, it is slightly more consolidation and downside pressure that we do normally see. I'm watching also the overall hedge fund positioning very closely here. Any additional outflows that we do see over the month of July would suggest that the short-term top would then be in at $41 per barrel. Oil really needs to close above $41 in order to continue that bullish momentum and then have a move back towards 43 and above that 45. However, at the moment, as I mentioned, it really is a case of trading the range right now, buying at 36, selling at 41 and capitalizing on that approximate $5 range for oil at the moment. That's just been a perfect way to capitalize on the current consolidation that we're seeing. Of course, if we were to see a break and close back below $35 per barrel, this is where it would open up the door to more pressure back towards $30 per barrel for US oil. So again, you really want to keep an eye on those key news items this week. The API data, Wednesday's oil inventories data, the minutes of the FOMC, and also Thursday's non-farm payroll. These can all be catalysts for big moves here on the oil market, and that's what I would keep a very close eye on for this week. So with that, that's been Oil Asset of the Day, and of course I wish you good trading.